Welcome to the fourth episode Capital TV Midweek Update. My name is JC from TradersTruthReview.com. For this week, we have another illustration of a very famous lesson, the road to success. Can you spot what this person trying to do? Yes, he's trying to reach for his success. And along the way, he will encounter many distractions in life. For example, get rich quickly, quick spending, spending more, and short-term pleasure. And we have a spot, a blank spot, just for you. If you know the answer, and please do so, send me your answers to jccapital@gmail.com. I have the prize for the right answer, just for you. And for our midweek market outlook, this week, on Monday, when the KLCI was trying to breach above the 1835 resistance level, we were hoping that it would have a new breakout to retest the old resistance 1880 that we experienced back in 31st December 2012. However, our hope was quickly dashed when the market failed to clear the 1835-1840 and came back down. It quickly retested the support when the news of the tragic incident MH370, the markets finally broke down, but still supported at 1820-1825. That's on the good side. We have a lot of support now denoted by the sign of strength. Now see this green arrow here. What is sign of strength? Sign of strength, or SOS, we sometimes call it, it's an evidence of demand coming in to support the market from falling further. Now remember, prices fall not because of sellers, but because rather lack of buyers to buy and the support from falling further. It is quite critical now for the KLCI to hold down its level, at this level at 1820, 1825. Now, if you look at this chart that we see in here, definitely the midweek trend is now sideways with a bias to the downside. Now, let's turn our attention to the KLCI foreign fund net flow midweek update. Yes, you heard it from and see it first at the Capital Midweek Update with JC. Now, on this slide, we notice on Monday we have foreign fund steps in and sell more than 200 million, which we saw it on Monday when the MH370 incident came out. However, previously in the past, they've been slowly accumulating, quietly buying. Perhaps now we have a strong hand coming in, stepping in, with a possibility of more large foreign funds flowing out here. Now, by the way, the blue line that you see here, right, is the daily buying of selling and foreign funds, and the red line is the total accumulation over 5 days. It is important to see the trend of the buying right here going upwards. That way it is going higher trend or going north, which is good for the market. Now we hear it first from JC, TradersTruthReview.com on this week KLCI foreign funds net flow midweek. Now the stock to watch for midweek is Felda Global Venture, or better known as FGV. Now, Felda Global Venture is certainly a household name among palm oil plantation owners. FGV was listed back as an IPO back in December 2012. It is well backed up by government, institutional, and local financial bodies. This counter has seen many months of sideways movement. However, you cannot see on this chart in here, which is not important. But what's more important is the CPO prices, better known as crude palm oil. The prices have been gravitating upwards towards 2009 and 3,000 ringgit very, very soon. And we have seen this in this small insert chart. You can see it here, 2005 to 2009 and bridging 3,000 very soon. Now, this is caused by the warmer and dry spell coupled with the weakening ringgit, which will give a definite boost for the cheaper palm oil import and trust breaking much, much higher. The higher prices will also be reflected by many plantation counters and much more, and a lot of counters like FGV will definitely go higher. Now on the fundamental side, the PE for FGV is 22 times and dividend is only about 1 to 2%. So almost not paying anything at all. You get it first from JC, my site, TradersTruthReview.com. Now let's review our midweek stock. Last week was Dialog. Okay, you could see Dialog, the market was hovering around 340 when we were talking about it. Today, still pretty much here, but what's more important is this bar in here. That single bar, that long tail bar will denote this market, Dialog, will definitely move higher. Perhaps in the later week, we will review Dialog to come. Now, let's look at the message for this week, which is the two most common mistakes. The first one, which is the number one, lack of patience and discipline. I see this almost every day as retail investor and myself, sometime in the past, of course, taking trade that has very little chance of success. They buy at high and they don't wait for the market to correct. Now remember, all prices don't go up in a straight line. They correct. They go up and then they come down. And when they correct, contrarian investor, trader will scoop in and accumulate it. So decide whether you are an average investor or a contrarian investor. Now, for the number two most common mistakes that many average investors and traders buy when the market trend is turning southwards or downtrend. Again, by the first common mistakes, you must have the virtue of patience and discipline and wait for the market to correct itself. Look at the chart that is presented to you and never trade against the trend. Now remember, the trend is your friend. So that's all the time we have. If you have any questions, comments or query, send it to me at jccapitaltv@gmail.com. Do visit the site traderstruethreview.com, and thank you for joining us, and we will review as usual the Stock Watch FGV next time, same place, and send me your reply to jccapitaltv@gmail.com. Thank you.